What's up guys, welcome back to Money Crow, the channel all about making your money grow. In this video, I'm going to explain why a Roth IRA is my absolute favorite type of retirement account and why you should consider opening one today. First, I'd like to go over the other two most popular accounts that are available, 401ks and individual taxable accounts. 401ks give you the benefit of being able to deduct your contributions from your current income so you can defer paying taxes until the future when you withdraw your money. In other words, you avoid paying taxes now, you instead invest that money into your 401k and let your account grow. And then you pay taxes in the future when you finally withdraw from that account. As a visual example, let's say I make $40,000 per year and $10,000 of that is being contributed to my 401k. So I put the money in my 401k. Now instead of being taxed on all $40,000, I'm only taxed on the $30,000, and that $10,000 that I contributed gets to grow in the 401k tax deferred. When I finally decide to take the money out of the account in the far, far future, it'll have grown to a much larger balance. Just to keep it simple, let's say $30,000. Now I pay taxes on whatever I withdraw from the account. But remember, you didn't pay taxes when you put the money in. So now you're paying taxes when you're taking the money out. That's typically how a 401k works, where you defer your taxes to the future. The current age to begin withdrawing penalty-free is age 59 and a half. So in my example that I just shared with you, I wouldn't be able to withdraw that money without paying a penalty until age 59 and a half. So your money is locked in until that retirement age. A lot of people may hear that and be worried that their money will be locked into an account until so far in the future, age 59 and a half. But keep in mind that even if you retire early, you're still gonna need money after you turn 59 and a half. In my opinion, it's always better to plan to live longer than you might expect. That way you'll have money growing in different buckets and be ready for multiple possibilities. One of the negative things though of a 401k is that they have RMDs, which stand for required minimum distributions. RMDs basically force you to take a certain amount of money out of your 401k each year, even if you may not need that income, and you'll be obligated to pay taxes on those withdrawals. These RMDs start at age 72, and the current calculation requires you to divide your entire 401k balance by 25.6 and withdraw that amount. So as an example, say you have $100,000 in your 401k at age 72, you're forced to withdraw $3,906. If your balance is significantly larger, you can start to see why it puts you in a potentially unfavorable position if you have to pay taxes at a higher tax bracket than desired. And you'll also stop receiving the full benefit of having an account growing with tax-deferred growth because you're withdrawing a portion of the balance each and every year. This doesn't make a 401k a bad account, but again, since it does involve forced withdrawals, it has tax implications that must be kept in mind. Now onto a regular individual account. A regular individual account is a taxable account that you can open at pretty much any brokerage. It gives you a lot of liquidity and freedom when it comes to investing and accessing your money, but it requires you to pay taxes up front since all the money going into this account is after-tax money. As you begin receiving dividends in this account, you're immediately taxed on all those dividends at your normal income tax rate. And when you finally want to withdraw your capital gains in the future, you'll need to pay long-term capital gains taxes on those profits. I do want to make it clear though that there's nothing explicitly wrong with either of those accounts, and it's actually recommended to diversify your investment accounts. A typical investor may have a 401k, an individual account, and a Roth IRA. That's not uncommon to see. But now I want to go over the benefits of a Roth IRA and why I think it's the best of those three accounts. Before we continue, I just want to give a quick shout out to my amazing Patreon supporters. We have our standalone Crow CEO, Jorge Ledesma, and our 4 Crow investors, Prismatic, Erica, Andrew Paz, and John Harden. Thank you so much for your continued support. If you guys want to be notified immediately after I make a trade in my $100,000 portfolio, consider supporting the channel on Patreon. I'll have all that information listed on there. Link is down in the description. Another easy way to help out the channel is by clicking my 3 different referral links so we can both get free stocks and free cash. For a limited time, Webull is giving away 3 free stocks, M1 Finance is giving away $10 in cash, and Robinhood is giving away a free stock like Apple or Facebook or many others when you sign up. Links are all in the description. Thank you. So back to the Roth IRA. A Roth IRA allows you to contribute after-tax dollars into an account where all that money grows tax-free, which means you don't get taxed on the dividends and you don't get taxed on any of the gains. If you've messed around with a compound interest calculator, you're probably aware that as time passes, your gains become the lion's share of your account's value, so it's an enormous benefit to not need to pay taxes on them. Like a 401k, you don't have complete freedom in withdrawing the entire account value until age 59 and a half, but unlike a 401k, you can withdraw your contributions at any time with no taxes and no penalties. So worst case scenario, if you ever need to draw money from somewhere, it's not completely locked in. You're able to take back any money that you've put into the account. You're not eligible to withdraw any gains, however, otherwise you risk paying a 10% penalty for doing so. There are a couple exceptions to this, like buying your first house, but I would look into those more deeply, and to be honest, I wouldn't mess with the Roth IRA. I would just leave all your contributions and gains in that account and keep that account cooking until age 59 and a half. And to me, even that slight illiquidity is not a huge trade-off, and the blueprint of a Roth IRA is still the most beneficial in my opinion. Also, unlike 401ks with their RMDs, again that's required minimum distributions, Roth IRAs don't force you to withdraw money if you don't need it. You're able to continue growing the account tax-free for your entire life if you wanted. So who can open a Roth IRA and what can you invest in? As long as you're 18 or older and have earned income, you can open and contribute to a Roth IRA. The maximum you can contribute is $6,000 per year as of 2020. Your contributions can't exceed your earned income. So for example, if you only earn $5,000 per year, the maximum you can contribute is $5,000 to that Roth IRA. Inside of the actual account, you're free to purchase any investments that you'd like. I have other videos on how to invest and how to build a portfolio, but if you want to keep it so simple that you don't even have to think about it, I would simply buy an ETF like VTI, which is comprised of over 3,500 companies in the US. On average, a fund like this has gone up 10% per year, but it's important to remember that it's not free of volatility. It has suffered some precipitous declines when market conditions are gloomy. For example, earlier this year, March 2020, VTI dropped over 30% in value, and in 2008, VTI would have dropped almost 50% in value. So definitely assess your personal risk tolerance before blindly investing. Always hope for a best case scenario, but be prepared for a worst case scenario. Also, keep in mind that this account should be held for the long term, and it's much more beneficial to invest as much and as early as possible, even if the road to retirement is a bumpy one. If you're on top of things and you open a Roth IRA as soon as you turn 18 and are in a fortunate enough position to be able to max it out each and every year, you would never have to worry about another investment or retirement account for the rest of your life. This does assume you're okay with a typical retirement age of 60 years old. Let me show you the math behind this. If you want to max your Roth IRA account every single year, remember the current maximum for 2020 is $6,000. That means you would need to contribute $500 to the account each and every month. If you look at the average 90+ year return for something like VTI, it's been about 10% per year. Minus inflation, that's closer to 7% per year. Here's what a 10% return looks like, maxing out your Roth IRA every year until age 60. We can see that with only $252,000 of the account being your contributions, you've grown the account to almost $4 million. If you want the inflation adjusted number at 7%, you're still at $1.5 million in today's money. And any portion of that money can be withdrawn at your liking, tax-free. That's the power of a Roth IRA. It allows you to one day retire a tax-free millionaire and possibly even a tax-free multi-millionaire. Even if you're not able to max the account, it's still really valuable to have and just be able to contribute whatever you feel comfortable with whenever you're able to. You can open a free Roth IRA and earn some bonuses with my links in the description through Webull or M1 Finance. But those aren't your only options. There are very large big name brokerages like Vanguard, Charles Schwab, and Fidelity, just to name a few that are phenomenal Roth IRA providers. But of course, do some research to see which one is right for you. But I can't stress enough how important it is to open a Roth IRA as soon as you possibly can. Thank you guys so much for watching until the very end. I hope you'll be back for future videos. And as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you next time.